Well, good morning, everyone. Hope you had a great weekend. Hope you had the chance to recharge, to have good time with friends and family. That's what weekends are for, right? Are we Thanksgiving week? Nasdaq calendar. Thanksgiving Day, November. It's next week, 27th. All right, so not this week. All right, so let me share the screen, then we'll start. That will probably be the quickest session. And by design, right? You remember, guys, what I say when we are in an uptrend. Price is above a rising 21 EMA structure. Breadth is expanding. Nothing else to overanalyze or to dig deeper. So market is with us, win at our back, and we focus on setups. We focused on executing well our system. And now is the inverse, right? So what do we have right now? It's a downtrend. So we have that high fail breakout, right? So we broke down from the 21 DMA structure last week. Then what happened is we rallied into the declining 21 DMA structure. And look what happened. We rejected that structure. We didn't make a new low yet. So we didn't reconfirm a pure reconfirmation of the downtrend, right? But what we have is a lower high. So that's in the spirit of the downtrend. But obviously, we will need another lower low to really reconfirm the downtrend to be kind of official and structural confirmed. But saying that rejection of the declining 21 DMA structure, and at the same time, we take our breadth matrix and we look at what I use. This is the McClellan summation and oscillator. And we're right back down into a downtrend on the summation below a declining 10 DMA. We had a hookup attempt last week. I think you remember. And then we hooked back down. And we're back into a downtrend, confirmed downtrend. We are not oversold yet, either on the summation or the oscillator, which is more short term and used to kind of time the possible extensions. But yeah, so we have price below a declining structure. Price is in a downtrend structure, that's confirmed. And we have breadth, so summation in a downtrend below a declining 10 DMA. So the win in our face. And we're not oversold yet. So we're kind of in a downtrend, no man's land. So for me, there's really nothing to do today and probably in the next few days until, again, what I want to see. Let's go back to trading view. So what I want to see is constructive action around and above the 21 DMA structure. So no idea if we'll pull back for long, or do we have a correction or anything like that. I don't know, and I don't care, to be honest. Everything that I'm waiting for is that reclaim and backtest of the 21 DMA structure. And if you didn't and okay, I'll cover that a bit later. We have more time. I'll show you what I updated in the Git book. And I explain explicitly what I'm looking for around the 21 DMA structure and with the McClellan summation and oscillator to engage back in the market. And for me, you know me by now, I'm a market first guy. Unless we're on a confirmed uptrend, then my focus shift on executing my rules and my system, my process on individual positions. But for me, market comes first to decide if I engage, if I get positioning or not. So what I want to see is constructive action around the 21 DMA structure. So I want to see that initial reclaim. So you can engage on the reclaim, but usually we're already quite extended. What I like to look for is that first initial back test of the 21 DMA structure. Same thing happened in April. So you get that reclaim after making a higher low, right? And then what happens? We have that reclaim, and then we back test. That was a quick one, right? So when you get those big correction, those big flush with VIX spiking, it can go fast. You have to be open-minded to trade on the smallest clues around the 21 DMA structure. And we had kind of a reclaim and backtest here. That's very early, and it was mostly intraday. So engaging on that pivot reclaim here would have been kind of a super micro reclaim and backtest. So you can engage on that, and you can engage on the backtest as well. Both offered really great opportunity. But that's the kind of action that I want to see on the right side. Small range, breakout as we reclaim, that type of stuff. And it's all over the place. That's always the same thing. We reclaim the 21 DMA structure, either that we go and don't look back, or we back test, we form a higher low maybe below the 21 DMA structure. That's not a magic line, right? We can flush below, but as long as we keep making those higher lows on the right side, then we build constructively, and you can start looking at individual stock, individual setups in the top liquid leaders as they form their entries as well. So that's what I will look to re-engage. Again, now is that the time. Credit spread. So let's look at the internals a bit. Friday we had kind of a reversal, right? But I'm seeing that as a potential breakout and back test. So we found support right at the 21 DMA structure, now rising. And the same thing happened for VIX, right? So we had that pretty hard rejection of the base structure that was kind of anticipated. But now we back tested the rising 21 DMA structure. And what will we do from here? Do we find support and breakout, which would confirm the longer and deeper pullback scenario? Or we kind of make a lower high and we follow through on that rejection and we break the 21 DMA structure? That would be constructive signal along price on QQQE, right? To re-engage in the market. Bitcoin, really lagging. Again, nothing to do here. Strong downtrend below the declining 21 DMA structure. There's absolutely no reason to touch that. It does not even show leadership. No climatic kind of flushing action. So yeah, it's in the just let it do whatever it wants to do, and then we'll look when it trades around the 21 DMA structure, right? in April. So that's the kind of analysis and clues that will gather along the pullback or the correction or whatever. Look what Bitcoin did after that correction in April. Bitcoin was going sideways, and I know we covered that last week, but just want to reiterate the kind of action we see in the risk on assets versus the market, and why we might be in for a bit longer pullback that most are anticipated, is we don't see that setup and that leadership and that decoupling for the risk from the risk on assets. While the market was making a higher low and was trying to roll over, Bitcoin was making higher lows and was holding the rising 21 day structure and actually broke out as the market was making a higher low. So it was still in that downtrend, but was looking a bit more constructive with that higher low. And you had Bitcoin breaking out. So that's that kind of full picture that you need to assess is if the market flushed and it's trying to build that higher low on the right side, and you see that, and you had Palantir, Robinhood, all those names that were setting up and showing relative strength and decoupling action from the indices, and that was the clue that the market was ready to go. And we don't have that right now, and far from it. That's quite of the inverse, right? We have relative weakness with Bitcoin pushing to new lows, while the market was trying to hold its rising 21 day structure. So we're really kind of at the opposite of the spectrum of what we saw in April. And for me, that's quite the red flag, to be honest. All right, and obviously no focus list today. Um, as long as we don't see that constructive action on QQQE on the bread side, for me that's a clear sit on the sidelines kind of market and just be patient uh, before re-engaging. All right, so that's a game plan for me. I don't know if you guys have any questions. Joe, do you really want to speak? Do you have a question? I see that you requested to speak. I can give you the mic. I think you can speak now. Oh, okay, no worries. And I had the question. I had the question in Q&A channel last night, and it was a good question. If you're not experienced and you don't have your trading system really tuned in and each rules is known and you know what to do, now is the time to go back into your journal, bring back all the trades that you made this year or in the at least the last market cycle, review those trades, look for mistakes if you did mistakes according to your system, if you need adjustment to your system. So could you have tweaked some things to get you into the winners at the right spot, etc., etc. Do you uh, look at your winners as well? Look at your winning trades and look if you can do more of what's working. That's also an angle that is often overlooked. Um, and yeah, just review your trades, learn from them, learn from books, learn from interviews. It's really the time for you to own your craft, to get better and improve for the next market opportunity. Myself, that's a bit different because my system is at least for me, it's pretty much where I want it to be. I don't want to change too much. Small tweaks here and there. Um, so for me, that's really the goal, is to recharge, to get that mental mindset ready for the next market opportunity, not burn myself by shorting the market, and really to observe what the market will do, start to recognize that relative strength, that decoupling from any risk assets or the liquid leaders. And for me, that's really to be ready. It was mostly nonstop since April. Um, and yeah, that takes a toll. Even if we don't day trade, it you need time to recharge. So I'm seeing a lot of chart requests. And do I play rotation? No, I don't play rotation. And let me tell you why. So rotation in bad market are really hard to play. They will show some constructive action, and then they will stop to lead. If you want to make quick bucks and small profits, that's for you. But I just explained, for me, that's way more important to recharge, to be ready for the next market opportunity in the names that I trade. I don't trade energy, I don't trade pharma, I don't trade biotech, I don't trade China. I trade mostly the liquid leaders. That's 40 names, 40 to 50 names. That's all I trade. And that's what I found to work best for me. You don't need to chase everything. You don't need to be in the market every time. Uh, Action is not equal to performance. Um, Playing the market right with size at the right time, that's what important. And I can review AMD, but do you really want to buy the only name that is still hanging out? Pretty wide action, to be honest. When the market is bad in a clear defined downtrend, breadth contracting, yes, there will always be one name, one setup. There will be setups almost every day. Uh, but I can guarantee you that you will chop yourself, that you will lose your mental energy, and when the market is really setting up, you will be so exhausted in a much deeper drawdown that you will not be able to execute and have those 15, 20, 25% mount back to back to back like we did in April. If I was burnout, no way I would have doubled my account in a few months. Uh, so again, I know it's counterintuitive because we're mostly rewarded for action and for work, and that's how the corporate world works, right? If we work, we're paid. But trading is not the same. You are actually rewarded for inaction and being patient in the market most of the time. Either that you're in cash and you're patient to re-engage, or you have exposure and you're patient to let it work, right? So it works both sides. But don't try to be active every day in the market. That will kill your performance. So I'm not covering pharma or energy. If you want to trade them, uh, go for it. If you think that the energy sector is gonna pick up and lead and whatever, but understand that when the market gets into a pullback and selling pressure comes hard, even the defensive sectors that are leading will be choppy. Uh, if the market is down like 2 or 3%, the Nasdaq 2-3% or more, that will be hard, even for those sectors, to be clean, to show a lot of momentum. When the market will go down 3%, you will feel it, even if in those defensive sector. On small red days, they will outperform and the pressure will be left off, and they will go a bit more. But if the market have big selling pressure, they will feel it for sure. So go for your system. If you allow yourself to trade them, go for it. But I'm not. Just wanted that to be clear. And I don't mean that in a bad way, right? I was there before. I had to trade every day. Um I was focused on only the setups, and like I said, there's always a setup. But I just found out over time that if the market is in a downtrend, breadth is contracting, my win rate goes down the drain. And when I was trading outside of my universe, all right, it's there's a reason why I do that, right? Uh, in 2022, 3, and even 4, I was really setups focus, right? I was trading every sectors, every setups that I found, and what I wanted to say with that, yeah, there's always a setups, right? So when I started to use the summation index, MCSI, I actually back tested my own equity curve, my up months, my down months with the McClellan summation index. And keep in mind, I was trading a lot more stuff than just tech and materials and cyclicals that I trade right now. And what I did is take my EC, take my equity curve, and the summation index. And what I found out, I think it was in 2023, was if I stopped trading altogether in a downtrending summation index, then all my red months were gone. So it was really eye-opening for me that if I can just stop trading when the market is bad, when the market is not on my side, then I can actually remove all my red months and only leave the green months. So you basically trades in those months because, and I don't mean that in a bad way because I was there as well a few years ago, because you don't you didn't backtest that for your own trading, right? That's the first reason. um, and and I want to be careful by the way I'm saying this, because again, this is not bad, this is a learning process. uh, there's that attachment to action equals profits, right? We think that if we trade, then we will make money. But there's right time and bad times to trades. So I really want that to be super clear. And whatever the basket of stocks that you trade, whatever the market that you track, the important is to clearly define the conditions that you want to trade and the conditions that you don't want to trade, and stick with it. Yeah, I don't trade energy because it trades bad. Look at that. There's Where's the trend? That's awful. Yeah, if you caught that energy trade in 2022 during the bear market, you could have made some money there. But again, I know it's hard to understand for everyone. Guys, I want to focus in the high probability windows, and what makes me the most cash is the liquid leaders. Those are institutional supported, they give the best returns, and if you're able to not trade when they're bad and trade heavy when they're good, you have yourself a triple digit years each time the market is good. That's choppy. I don't want to trade that. Thanks, guys. I I I love that you guys are jumping in and giving the links. Thank you very much. I love that the community helps itself. Thank you, guys. And I just want to reiterate and continue on that subject. There's kind of two types of traders, and that's important to understand. Uh, and I'm not trading for my ego. I'm not trading to sound smart. And sometimes some people that you'll follow on X or whatever, uh, the goal is to be right. It's to catch the only trade that's working, and being able to say, "Hey, I caught the energy trade in 2026. That was amazing, and I caught that, and I was seeing that trade, etc., etc." That's the first trader. That's in the game to analyze everything, find to find to try to find the sectors working, the right correction, the right rotation, and be right about it. That's the first trader for me, and that's why sometimes you ask me question, and it's just out of my system because I developed a system to trade a small basket of stocks during a certain period of time, and to do that again and again and again. I know when I want to trade, I know what I want to trade, I know how do I want to enter those names, how I trim, how I exit my trades, and manage my risk, my exposure, and my portfolio. And for me, that's everything that I need to do over and over and over again. It's almost became mechanical in the sense that I don't care what the market will do. I don't care the rotation that it will do. I don't care if it's a small, a medium, a large, or an extra large pullback, or correction, or a bear market. I will be there when QQQE is above and backtesting the 21 DMA structure, when the liquid leaders that I know because I use TradersLab, and there's my RS rank in it, and that's the only thing that I need. Then I know exactly the names that I will trade. I know where do I want to trade those names, the position size that I will take, where my limit order is gonna be to trim into strength, finance my trade, when I will further trim, when I will be stopped out, when I will stop to trade, and just wait for the next market opportunity. That's everything that I do. So I know that's a long rant this morning, uh, but I was looking on X this weekend and this morning, and that's a contest to who will guess what type of pullback and correction or bear market we'll have, what kind of rotation we'll get, what type of stock, and what stock will continue to rise despite the pullback. Uh, and I was there before, and that's why I think it's important to rant about it this morning, uh, because I was there. I evolved. I found my niche, and being ultra focused, I know is not sexy, is not looking smart, or I don't look intelligent because I'm not able to forecast what will be the rotation happening. But I don't care because that's what make me money. And let me tell you something. I only trade to make money. I don't trade to look or sound smart at all. I just want to make money. That's why I'm doing this. All right. So, long rant. Do you still have questions after it? And again, that's nothing personal, guys. I was there. I'm just trying to help you and give you a bit of experience from the same road that I took years ago. Oh yeah, I wanted to show what I did over the weekend, right? Uh, all right, so if you're new or even not so new, uh, I updated a part of the Git book last week, and I think that it will be a good reminder, or if you have some times today you want to dig that. There's very good information, and again, that Git book is not uh, here's a system, trade it, and you'll be a multimillionaire in 5 years. That's not what's about. That Git book is my trading system, how I trade. There's a large part about the mindset, the mind map, and all those things. That's tailored to me. That's my rules. It does not mean that it fits you or that you want to integrate everything, but it's meant to first explain if you're new and want to know how I trade, but most importantly, to inspire you, to show you a bit how a set of rules, a system, a framework should be built. What's inside? What should you know in advance, even before putting a trade? So you should know when you trade, when you don't trade, what you trade, when and where and how you enter, when you trim, when you're stopped, etc., etc. That should all be in your system. So I updated the 21 DMA structure playbook that I call that. So basically explaining what is the 21 DMA structure, what is the playbook, right? Um, and I built kind of the four scenarios that I look for around the 21 DMA structure, either on the market side to define my engagement or to execute within the individual names as well. So the first one is the pullback into a rising 21 day structure. So obviously that's in a confirmed uptrend with a breadth expanding regime, trending market like we had in April. So I took those examples of the last April run because they were fresh in my mind. But yeah, so pull back into the 21 day structure, rising 21 day structure. You can go for the first initial bounce and then the daily reversal on strength, or you can buy the weakness. You can look for the high or low. So as we set up that range, that low cheat range, you look for constructive action on the right side, that higher low, eventually that daily reversal there as well to kind of confirm the entry. And then you get those type of entry along the trend, and you execute that rising 21 day structure. Then after a pullback, after a correction, there's that reclaim and backtest setup that I really like to trade. So early on, after a correction, you get that reclaim and backtest. It forms that higher low on the right side, and often very close to the reclaim, and sometimes that a bit higher. And both are kind of the same reclaim and backtest setup for me, because they're very early out of that correction and we're just confirming the new uptrend. Uh, Unlike AMD, which was a bit late, a few weeks after the turn. Then you get the rejection and higher low. So that's kind of the initial uh, constructive action that you get after a rejection, right? So the downtrend is still confirmed. You make lower low, and then you have that retest of the declining 21 day structure, that rejection, and instead of rolling over, then you find support, you build that higher low, meaning that the sellers are not as aggressive or the buyers are more aggressive. That's a dynamic. And then you can look for that reclaim, and you get that nice higher low confirmation on the right side. And the bad scenario is you break down below the EMA structure, and it can be just after the initial break, and or it can be later in the downtrend, right? But the idea is you retest the declining 21 day structure, and from there you have two scenarios, right? So either that you build that higher low and you reclaim the 21 day structure and you get constructive, and you can look at the other scenario to engage, or you reject and you roll over. You make a new lower low. And in that case, we reconfirm the downtrend. Now it's time to be patient again. Not that you engage there, but at least you were observing and ready to strike. And now we're kind of reconfirming that downtrend. You go back to being a bit more disengaged and to wait again for action around the 21 day structure. I also added that QQQE section about why I wait for price to confirm the market that I want to trade in, and also that section on the McClellan oscillator and summation as a timing and confirmation tool. Why I don't try to pick bottoms. So this one, if you want to read it, that's a good read, especially right now. Why I don't short. So I shared that over the weekend on X as well. So that's in the Git book. And yeah, I think I updated a bit of that entry explanations. Yes, reiterating my core approach. So there's nice new stuff that I added. So if you have some times this week and you want to learn more about how I trade, that's the resource to go for. All right, so enough with me speaking this morning. I hope everyone a very good day. Be patient. Um, be patient and observe. If you want to follow the lead, It's a time to sit, relax, recharge, go do other things, work on your craft, work on your system. And if you have questions, I will be on and off today, but I will still be here. So have a good day, everyone. Enjoy. Cheers. Bye bye.